Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Biopath Holdings, Inc. quarterly report. Biopath Holdings, Inc. trades at a lower price-to-book ratio of -0.06 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. The company exhibits a very high leverage profile, with liabilities accounting for 96% of total assets. This elevated debt level warrants heightened caution, as it may limit financial flexibility and increase risk during economic stress. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. Biopath Holdings, Inc. is a clinical and preclinical stage oncology-focused company that develops R9 nanoparticle drugs for various types of cancers. The company's primary business involves the development of its lead drug candidate, Prixigbersen, BPON-1001, which is currently in Phase 2 clinical trial for treating untreated acute myeloid leukemia, AML. In addition to AML, BPON-1001A, a variant of BPON-1001, is being developed for treatment of solid tumors such as ovarian, endometrial, and pancreatic cancer. The company's pipeline also includes liposomal BCL-2, BPON-1002, which is in Phase 1 clinical trial for treating refractory/relapsed lymphoma and chronic lymphocytic leukemia. Furthermore, Biopath Holdings is developing liposomal STAT3, BPON-1003, for the treatment of pancreatic cancer, non-small cell lung cancer, and AML, with this drug currently in preclinical trial. In addition to its oncology-focused pipeline, the company is also exploring the use of its technology for treating obesity and related metabolic diseases. Biopath Holdings' innovative approach involves using a platform called DN-Abilize, which incorporates p-ethoxy into a lipid bilayer to protect DNA from destruction by the body's enzymes when circulating in vivo. The company was founded in 2007 and is based in Bel Air, Texas. With its focus on developing R9 nanoparticle drugs for various types of cancers, Biopath Holdings is poised to make significant contributions to the field of oncology. Biopath Holdings' list of businesses and services includes development of R9 nanoparticle drugs for cancer treatment, clinical trials for various types of cancers, including AML, solid tumors, lymphoma, and chronic lymphocytic leukemia, preclinical trial development for obesity and related metabolic diseases, use of the DN-Abilize platform to protect DNA from destruction by the body's enzymes when circulating in vivo. Biopath Holdings, Inc., BPTH, has experienced a staggering 94% decline in its stock price over the past year due to a combination of financial distress and regulatory noncompliance. The company's failure to meet Nasdaq's listing requirements was a significant blow, with multiple notices received regarding its inability to maintain the minimum bid price for its common stock. This led to the delisting of Biopath Holdings from the Nasdaq Capital Market in February 2025. The company's weak financial health has been a persistent concern, with negative earnings per share and a high rate of cash burn. In November 2025, a Form 8-K filing raised significant doubts about the company's ability to continue as a going concern if it was unable to raise capital. This uncertainty was further exacerbated by delayed SEC filings in November 2025, which added to investor concerns. While Biopath Holdings provided updates on its clinical development programs throughout 2025, these were not enough to counteract the broader financial and regulatory challenges facing the company. The discontinuation of Phase 1 trials for one of its treatments due to patient enrollment challenges was a notable setback. As a result, investors have lost confidence in the company's ability to recover from its current financial struggles. The combination of failing to meet Nasdaq's listing standards, coupled with persistent financial instability and doubts about its long-term viability, has been the primary driver behind Biopath Holdings, Inc.'s significant stock price crash over the past year. The primary drivers of revenue growth or decline for a company can be attributed to several key factors. The successful development and commercialization of drug candidates is a crucial factor, as it directly impacts the revenue generated from these products. Additionally, the timing and amount of services performed also play a significant role in determining revenue growth. Milestones achieved by the company are another important driver, as they often come with associated payments or fees. License fees earned from partnerships or collaborations can also contribute to revenue growth. Furthermore, payments received upon eventual sales of drug candidates, if successfully commercialized, can significantly impact revenue. These factors collectively influence a company's revenue trajectory and are essential for informed decision-making. The company's financial performance indicates a significant issue with its ability to generate positive operating cash flow. The data from both pages 7 and 27 show that the net cash used in operating activities has been consistently negative for the past 2 years, with amounts of $1,596 and $7,694 in 2024, and $1.6 million and $7.7 million for the 9 months ended September 30, 2025. This trend suggests a persistent problem that needs to be addressed by the company's management. Management is optimistic about the company's outlook, highlighting several key strategies. The company plans to conduct a Phase 2 clinical trial with prexigebersen in combination with other treatments, which could potentially lead to new treatment options for patients with AML and pancreatic cancer. Additionally, management intends to leverage its drug technology template to develop new liposomal antisense drug candidates targeting various disease-causing proteins. However, the company also acknowledges significant challenges ahead. It expects to incur substantial operating losses as it expands its development programs, which may necessitate collaborations, license agreements, or additional financing to achieve profitability. Furthermore, management notes that the company has insufficient cash reserves to meet its obligations and fund future growth, making it reliant on securing external funding through various means. Despite these challenges, management remains committed to advancing the company's drug development pipeline and exploring new opportunities for growth. While there are no guarantees of success, the company is taking proactive steps to address its financial needs and position itself for long-term sustainability. That concludes the financial summary for Biopath Holdings, Inc. Feel free to comment below, and I will be happy to answer them when possible.